Hey, YouTube. As promised, I am continuing my experiment, and I am continuing to report the data. In the coming months, I will offer some additional tutorials on mechanics of what's being done in this experiment, further explaining the math, and basically trying to, as much as is legally possible, help others reproduce this experiment for themselves. But I'm not advising anybody take any actions. I'm merely reporting data. I'm letting you know the results of choices. Because in the United States of America, when you start recommending to people that they take actions, even if they're 100% correct, you're technically breaking the law. You're not allowed to advise people financially unless the government says it's okay. I don't have an interest in dealing with the United States government. I don't have an interest in having them crawl up my sphincter and telling me whether it smells or needs to be scented with potpourri. I don't have an interest in this. I prefer to live my life and exercise my free will. It's unfortunate that the United States government feels that that's somehow wrong, but that's its choice. My choice is how I choose to react to that choice. I'm making that clear because the data that I am presenting in these videos could be misconstrued as financial advice or actions that I am advising you to take. I am making no such advice. I'm merely conducting an experiment and reporting data. I have modified the chart to better explain that data. Let me explain the modifications I have done to the chart so you can understand the data I am reporting to you. In the leftmost part of this chart is the proverbial 0 day. It is assuming that an individual had US dollars and had choices of what to choose to do with that savings. The first and most obvious choice would have been to simply hold on to the cash. They wouldn't risk losing any of the cash because they held on to it. And over time, inflation would occur. You have a hard time seeing it in the very beginning of this chart, but what slowly happens over time is the green line starts going down into the negative numbers, and it loses buying power, which is what's being reported on this chart. The green dashed line is based on historical changes in buying power of the US dollar, what you would atypically expect that curve to wind up looking like. If you'll notice, for the moment, the solid green line of what is actually happening based on the index numbers reported as of yesterday, April 15th, is more or less almost verbatim following the expected line based on history. The next thing you could have done would have been to invest the money. Something that gold and silver people do not like you to do. They say that's speculative, that's voodoo, and none of that money is real. I don't personally care if the money is real or entirely the figment of somebody's imagination. I simply care about how well it spins and the buying power that results from the choices made. Anything else is philosophy. Why money does not make the world go round, buying power is a necessary part of interacting with society. If you wish to pay rent, buy food, drive a car, and honor financial liabilities required by the laws of the United States, such as buying insurance, paying your taxes, and things of this nature, you are required to have a degree of buying power, simply to maintain a quality of life. It is not wrong to care about money in regards to this obligation. Beyond how much more than that you care about money is a personal life choice and philosophy. I'm reporting data. However, if your buying power increases over time, and you have a desire for a measure of material things, then you will be able to have nicer ones and or greater quantities of these things that you consider important to your life, should you make choices that result in your buying power increasing. The solid purple line is the result of making the choice to trade in the Forex market. The dotted purple line is based on a reasonable rate of return adjusted for the same inflation presented in the dotted green line over time. So based on an expected return on investment of Y and a change in buying power of X, you would expect the buying power of that choice to proceed along the purple dotted line on average. But we're reporting data. So we're reporting the data of the statistical likely trajectory of that line, and we are reporting the actual resulting buying power, which initially lost buying power due to the brokerage fees and the fees to transition the money from US dollars to a trading account. And then reporting the return on investment, and as time progressed, adjusting that for the change in buying power, and that the more money is not necessarily worth as much more as you think because the dollar doesn't go as far as it used to. Both the second to last point in that line, which is the case for all the other lines we're going to go through, the second to last point in that line is the buying power as of the end of last month, March 2013. The furthest most line is the buying power as of today based on the preliminary inflation numbers that the dotted green line creates. That number will be reported at the end of the month as a preliminary April buying power, and then as we are doing this month, adjusting the mid-month number, we will do the same for the April number once we know the April inflation numbers. And at the same time, as we are doing now, report what's happened since we last reported data. Is buying power increasing or shrinking? Of course, that's going to continue to change over the next 2 to 3 weeks as the April month ends. It may get worse, it may get better. But for the moment, the buying power of investing is doing better than expected. You also had the option to buy gold, which would have resulted in a large loss of buying power because of the premium in fees to buy physical gold. This is what precious metal salespeople and supporters advocate doing. The result of the choice they advocate is a loss in buying power. What historically you should expect to happen is that over time, once you take that initial loss in buying power, it flattens out. For the moment, the data is reporting that gold is almost verbatim following the historic trend, and that silver, hence the silver and gold lines, started off following that trend and is now actually doing worse than that trend would expect it to do. Because the world always changes, we are also reporting as part of this experiment the value of cryptographic currencies, in this case represented by bitcoins. Initially, due to the highly speculative nature of bitcoins and difficulty in selling them on spot at all times for an ideal price, that lost a considerable amount of buying power. It's to be expected when things like an exchange get hacked and collapse, there's mass theft, and a great deal of uncertainty as to whether or not the bitcoins will have any future value. But confidence seems to be being restored, and the value seems to be slowly creeping its way back. As of the close of last month, it was doing worse than any other choice you could have made. As of the moment, it's doing better than silver, almost caught back up to gold, and who knows what it will do in the future. I have no data to present a dotted line for cryptographic currencies because there is not historic data to tell you how they react. I can tell you, based on 100 years of data, we expect the dollar to follow that dotted green line. That is merely reporting historical data. I can tell you, based on almost a decade of the operations of the Forex market, that it is not unreasonable to expect an average rate of return simply by letting the market move of that purple dotted line against the inflation of that green line. Much the same for 30 to 100 plus years of gold and silver, I can give you those dotted gold and silver lines. I could offer you advice based on other markets and trends, but remember, I'm not legally allowed to give you advice. I am allowed, as a free citizen, to report data. What you choose to do with the data I report, and how you choose to interpret what correct choices it implies you should be making, is up to you. You have free will. We hope you have a brain and the ability to think and reason for yourself. Assuming these things are true, presenting you with data should be sufficient for you to make an educated, informed choice. What I can tell you is, historically speaking, based on historical data, those who make the correct choice in times like are happening right now have the ability to become rather successful and wealthy in a rather short period of time. It is an opportunity that avails itself a few times over the course of a human lifetime. An opportunity that is more than worth taking advantage of if you understand it and can take proper advantage of it. For people who allow salespeople to make them too afraid to make the correct choices and panic and become obsessed with fear and chase bubbles, they watch the world pass them by, and they do not do well in these times. On a good day, they break even. On a bad day, they increase their poverty because they are reducing their spending power. As I said, in the coming months, I will continue to do videos, and I will do tutorials on mechanics. I will better explain what is going beyond the scenes in this experiment, not in an advisory role, in a presenting information and methodology. I will continue to report the data that results from that methodology, and so forth. I will explain the math that is going on in this chart so that you can plug the data into a spreadsheet and reproduce it on your own independently. But I'm not giving you advice. I'm not allowed to legally tell you to choose A over B, C, and D, because that would be giving you financial advice. Anytime I step over that line, I will be required by U.S. law to say a disclaimer, which basically in legalese says, even though I told you to do X, I'm not telling you to do X, because that's not legal for me to do. If you choose to do X because I told you to do X, you did it because you chose to, not because I told you to. If anybody else's head is spinning, good. It means your ears are open and your eyes are paying attention. You will do fine. Those of you who think I'm being overcautious or want to continue to chase things, I weep for you. But I'm going to do the most I can within the confines of the law to try and draw a neon sign around correct choices so that those of you who can't see them as well as others have a better shot at being some of the people who do well in the times that are happening. Peace out, all.